How much do we actually know here?
Well, what we're hearing is that this is a proposal from the US trade representative, as you say, raising those tariff levels from 10% to 25%. It is just a proposal at this stage. It is not baked in. There's a review process. There's a consultation process for the suggested tariffs of $200 billion, targeting $200 billion worth of Chinese goods. That ends August the 30th. It is after that point at which we may get these tariffs imposed. And of course, the new element to all of this is the level of tariffs from that 10 to 25%. What it means for China is that it ratchets up the pressure at a time when, of course, we are seeing the impact already being felt on the Chinese economy. So it does reduce the room for manoeuvre for Chinese policymakers. It is still not clear how they respond should these additional tariffs on $200 billion kick in. And interestingly, of course, this comes after Bloomberg reported that Steve Mnuchin's people, the Treasury Secretary in the US, are holding talks, have been holding talks with Premier Liu He's people about restarting those negotiations. That had led to some optimism, of course, in the markets ahead of this new line on the 25%. What we didn't know was a time frame. We didn't know the content of any additional talks. All those things were still up for negotiation, but at least it did seem like talks were back, potentially on the table. Of course, there is a gulf between China and the US when it comes to trust levels over a number of issues, but there is also that division in the White House, interestingly, between Mnuchin, who is seen as taking a somewhat softer stance on China, wanting to tackle the deficit and wanting to come out with some kind of deal, versus Lighthizer, the US trade representative, who has said and indicated that he wants to be in this for the long haul, that this is going to be a long, drawn-out source of tension between the two countries. So the question for investors is, where does the president side, on which side does he go with, and what is China's strategy post these $200 billion worth of tariffs if they do indeed kick in?
Tom, to what extent is this diverting China's attention from tackling its mountain of debt and indeed paying that down?
Well, we had a Politburo meeting here yesterday where they came out, reports saying that they were going to take a more measured approach to the debt campaign. So we're looking at a more targeted approach, it seems, following the first half where we saw a pretty blanket coverage in terms of tackling shadow banking. So you're expecting to see more policies targeted at state-owned enterprises and their debt levels and the property market. But you're also, of course, getting these additional policies that are being put into play around tax cuts, around support for the bond market, around reducing those capital requirements for the banks here to ensure that small and medium-sized enterprises get the credit they need. So there's some tweaking going on here, and that was reconfirmed by the Politburo yesterday. It is, of course, a fine balancing act for China's policymakers to ensure that they don't reinflate those bubbles, particularly at the local government level, and particularly when they're talking about restarting this infrastructure spending drive. So there are potential risks, certainly, for China's policymakers, though most economists that China speaks to, or that Bloomberg speaks to, I should say, looking at China, expect the policymakers here to maintain that total debt to GDP level at around the 260% this year. So they don't expect that to pick up much more. But of course, things could change.